Okay, so this is just a quick article, important to throw across you. This is from Reuters. It says big banks brace as British Forex class action seeks go ahead. So this is a very drawn out lawsuit that's been going on since 2019, but it's important to just update you guys on what's happening here. So it says a specialist London court will decide whether a long-awaited multi-billion pound class action lawsuit against some of the world's biggest banks over alleged Forex exchange rigging can proceed after a 5-day hearing kicked off on Monday. So this is happening this week. JP Morgan, Citigroup, Barclays, UBS, and NatWest, along with Japan's MUFG Bank, are braced for the first Forex class action lawsuit in Britain over cartels dubbed, quote, the SS Express and the three-way banana split. So basically, these guys would have these chat rooms, and that's where they would go in and potentially rig the Forex market, telling each other, hey, I'm going to move the price here, place your orders here, let's communicate here. We'll both make our small little spreads on the large number of units, and everybody makes a lot of money. The European Commission fined all the lenders apart from UBS, which had alerted the body of the two cartels. So UBS was the whistleblower here, and they got out with no fines, but it fined everybody else a total of €1 billion over the matter in 2019. A similar decision by Swiss regulator added a further 90 million Swiss francs in fines to the banks. It says Michael Higgins, the former chairman of British watchdog, the pensions regulator, and Philip Evans, a former inquiry chair at the Competition Markets Authority, are now vying to lead a class action case on behalf of pension funds and asset managers as they claim lost. The legal action will ensure that affected entities, large and small, based in the UK and abroad, are able to obtain compensation that they are owed. So you have to think, some of these Forex transactions that the cartels were rigging to move foreign exchange prices was actually influencing the hedge funds, the pension funds that were owning a currency. For example, we're going to talk about Hong Kong in a second. Like Kyle Bass has a fund that is ready and in a position for the Hong Kong dollar to the US dollar peg to collapse. So hedge funds, pension funds, they make decisions on where they think currencies will be valued in the future. And this cartel changing the price impacted the potential profits of those banks and hedge funds. So it's just interesting to see this all come into fruition here. And I think it's funny, too, that they just fine them. They never actually penalize them. And of course, JP Morgan, Citibank, Barclays, UBS, all the banks declined to comment. It says foreign exchange is the crown jewel of London's financial sector, with roughly 43% of the $8.3 trillion per day. That's pretty high. I haven't heard that number recently, but it's probably not wrong. $8.3 trillion per day market traded in the city. Lawyers have been sharpening swords since the EU Commission found that banks shared commercially sensitive customer data, transaction prices, open currency risk positions, and other details between 2007 and 2013. At the time the fines were levied in 2019, JP Morgan, RBS, now NatWest, as well as UBS, said that they had made changes in their controls. MUFG said it had also taken measures to prevent a reoccurrence. Yeah, sure. O'Higgins has instructed U.S. law firm Scott & Scott, while Evans is being advised by Hossfield, the two litigators that co-led a similar U.S. case against 15 banks that helped secure $2.3 billion in settlements for American claimants. But a CAT judge said in 2019 there could only be one representative for a British lawsuit. Investment banks across the globe have paid more than a combined $11 billion in fines to settle U.S. and European regulatory allegations that traders rigged Forex markets. So, in my opinion, are they rigging markets? Probably, just because we know that's what people do. They take advantage and they squeeze it dry for whatever they can squeeze it dry for. Also, with that being said, though, does it matter that they're getting fined? Probably not. Are they going to make changes? Maybe they fire a guy or they just move him to a different department and that's their changes. But as far as what they're actually doing, they're just going to look for new ways to make more money. That's what banks do. They look for ways to take advantage of the system, the laws, and make more money. And even in a situation like this, they could do a cost analysis and just say, hey, how much do you think we're going to get fined? 4 or 5 billion? Okay, if we're going to get fined 4 or 5 billion, if that's what their legal team tells them, how much money are we going to make? Well, we're going to make 60 billion. Okay, we'll pay the fine. Break the law. Doesn't matter. We'll drag it out in court for 10 years. Well, look, this happened between 2007 and 2013. Here we are in 2021, and it's just now having it start to get the ball rolling here. So to me, it's they don't give a fuck about the fines. They don't care about us at all. You know what I mean? All they care about is the bottom line. And if they could use chat rooms to work around us and manipulate price, what makes you think that they're not doing that now in a different way? Nothing. You should assume it's happening now. That's what I think.